Hello folks, I'm L.A. Little and this is your daily TA wrap. Well, we take a look at these markets and we do it from a neoclassical perspective, asking ourselves each time, what happened today and what does it tell us about tomorrow? I do the show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of the beautiful, snowy Rocky Mountains. Folks, glad you could be here. We've got a full show tonight. I've got lots of questions emailed in. I see some questions already starting to pop up here, so let's get to work. Let's talk about what happened. Let's figure out what these markets are trying to tell us. To start with, what do we have happen today? We got the Dow Jones down. What is that, 68? 68.2, closing at 16,462 and 3/4. It was interesting because we had a huge divergence today. NASDAQ was up about, actually the NDX itself was up about 16, 17 points at one point. They took it down, then they took it right back up at the end of the day. A lot of volatility starting to come in here. S&P's down a third of a point, 1837.5. The composite 12.5 higher, 4165.60, and the NDX 9 3/4, 3567.5, and the Russell pretty much flat, didn't do anything, 1157.5. We had gold down today. It's up a little bit after hours. Oil was down again today. Oil has been stretched beyond belief. Anything else about the same. The UUP, the dollar, was stronger, and that was probably one of the other main things that happened today. If we take a look at the markets, let's quickly run through these. And I haven't done the sectors in a while, so I want to flip through those. I haven't had a chance to do it today. I'll do that with you. But let's start with the general markets and what's going on there. So today we had the Fed meeting. Actually, I've been saying we're having the meeting. I knew we had one in January. I thought it was a little bit early. It really wasn't yesterday and today. It's at the end of this month. What was the Fed thing this week was the minutes from the last meeting. They get released, 3-4 weeks later. Those came out. Didn't do anything really to the market. A little bit of push around. What actually moved the market more was what happened this morning, and that was that we had the ADP report, which is a preliminary number in front of the jobs number, coming in stronger, about 230 versus what they expected. That sent short-term rates, bonds themselves, treasury notes, down, interest rates up, flirting with that 3% level again. And when it does break, I suspect that's going to be hard on the equity markets, but so far it hasn't. TLT was down, came back at the end of the day, pushed back up some, but the rates still under pressure because everybody is in that camp now. The Fed has told us, right, the economy's getting better, and so everybody's in that camp, believing in the Fed and believing in the fact that they're going to push this thing, or they've done what they've done, and it's going to push this thing higher. So S&Ps, what did they do today? We were talking about volumes escalating as we're going here, as the trading desks are really getting back to work. Today, kind of back up to, I guess, what you would call average volume, if you want to do average. If I draw that line across there, it's about there. So kind of back to where it was before we took the Christmas break, New Year's thing. The thing that I've been talking about is still important to me, is this bar. It's the January 2nd bar. That bar is the breakdown bar. That's where you came down first of the year. That's the bar you got to get over if you're going to do something. Right now, 4 days, kind of sideways. You got to push down, push down, push down. A little spike up today, you held. Doesn't tell me anything, right? If I go over and look at the Dow, looks like the same thing to me. Doesn't tell me anything. Same sort of scenario. Dow just a little bit stronger. Today it was weaker. I looked inside of it, what was moving. There wasn't much moving up. Most of it was down. We had Bed Bath & Beyond after hours. We had some earning reports after hours. They all got hit. I didn't follow up at the end of the after hours to see what they looked like, but they were all pushing down tonight for the most part. Let me bring it up and see what the numbers look like. So we had, because we're just starting to get into earnings season, and it's official tomorrow with Alcoa, or at least Alcoa used to be the official one when it was in the Dow. So Bed Bath & Beyond is 8.4% lower at the end of the day. Calix Software 8.6 lower, ZoomX 8.7 lower. Looks like Macy's tacked on 5%. So some big hitters on the downside, one of them to the upside. So not exactly the greatest start. The thing that was pushing today was the NASDAQ, the NDX. And what's most interesting here is that bar I'm talking about, January 2nd bar, top of it, 3577.03. Today we got over it and held, let me see, 3567.54, 3577, and did we get over it or not? No, we didn't quite get over it. So we're pushing right up to it, not quite over it. That's on the NDX, which has been the weakest. If I go to the IXIC, because the NDX actually did the retest and is now doing the regen, right? The IXIC, the broad composite, didn't get down that far, just barely got into that quad witching bar. The broad composite is actually over it. 4160.96 was that high, 4165.61, so it's over it now. So this is the one that if I were, watching something to tell me, is this thing going to break, this is the guy you want to see break out if you're bullish. So a breakout over the bar, it's 1, 2, 3, 4, it's only 5 bars, so it's not going to be a high, so it's not going to be like a swing point, but you would want to see it break out to have any possibility of an extension, right? This is the one that will do it. And if we're going to do it, it will be the first to do it. So that's the one to watch. Russell still can't get over the second bar. Here's the big second bar. And it's been hanging there 5 days now. 5 bars, including that bar. 1160.50, 1157. So you're right at it. It's always amazing how these things line up for, quote-unquote, the news. Right? Because you got the Bank of England, the ECB do their number in the morning. Bank of England before we start. The ECB be right about the time we start up. Those guys, they're going to do what they're going to do. If I look over to Europe, Germany's trying to come back up. And let's pop over there real quick. Germany's trying to come back up, but they are struggling. It is not as if it's a slam dunk on the way back up. And I've been talking about the CACs for a long time. The CACs was the one that was in trouble back in December, came all the way back up, did another big drop on the second. It's trying to climb back up there, but it is struggling. The strongest one is the DAX. The DAX pushing back up, laboring, right, as it comes back up. It also had the big bar down, just like it had back in December. Those are the ones that are, they're having a tough time. And if I go over to the other side of the world and I look at Hong Kong was down there, should bounce, did bounce. Now it's a question of how is it going to bounce, right? Because it's going to come back into this top of this bar, 23.097. I suspect it's going to try to do it tonight. That will be basically the test. That's where the gap is, and that's where we'll see whether this thing's going to do anything or not. Now the second is all the way back up here. That was the top of the wide price spread bar, tested, failed, came down hard, breaks under the low. Now you're trying to bounce back up. This still looks to me like it's going to try to come all the way down to the bottom of the range before it's over with. So if you look overseas, right, you don't see the strength that you see domestically, but that was the case all last year and we didn't care. Will we not care again? May not. This market has just done that, and there's nothing here that's any different than what I talked about last night. So let me flip over and look at the sectors real quick to see if there's any tells there, because it looks to me like this market isn't going to be able to get over the highs yet, just looking at overseas and looking at our market. So let's flip through the sectors and see what we got. We had a member last night call out the MU. Micron was going to report, probably going to help the semis. It definitely did. It was a great call on his part. And okay, so the transports, they're just trying to come back. Same scenario, nothing there. If I look at the semis, they did get a bounce today. Let me see if they got any juice in it. Yeah, they did. They got some decent juice. So they're going back up. That's 1.4. They're hitting it with 1.4. About the same volume. You got a gap right above it. It's going to try to close this gap. That's the 32nd. So the second here really extends back to that low. So again, kind of trying to come back and test the second. XLB has been under a little pressure. Let's see what this one did today. Again, coming back in. All of these that were over the highs were trying to come back and do retest regens. But this market is belligerent. It doesn't want to do retest regens. It doesn't want to let, everybody wants to jump the gun. Same thing happened here again. XLE actually had failed on the retest regen, and you can see the pressure still there. Part of that is the fact that oil keeps selling down. Oil can't find a bottom, so this still looks weak. Larger range there. XLF, this guy's had two nasty bars now in a row, and it's still hanging up there. And I just looked at like Citigroup, Bank of America, some of those guys are still stretching. They are the ones that come out with earnings first. They are the ones that also benefit from this rate structure, the yield curve starting to steepen like it is, right? And that helps them. And they borrow on the short end, they lend on the long end. So as that curve steepens, it actually helps them. It helps their bottom line. XLI, industrials. Let's see what they did. They were trying to come back and do a retest regen. Again, they can't make it back to the retest regen. Everybody wants to jump them. XLK, I think, actually made it back, if I remember right. Yes, it did. And it's doing a retest regen higher, just like the NDX. So nothing there any different. XLP has been weak, still weak, and pressed harder today. So this one, the two weak ones are the utilities and the XLP. There's kind of three ranges here. It's in the bottom of it, trying to break down to the fourth one again. Right? You kind of got a fourth one down here. So you got a swing point low here. Volume wasn't that much. Yeah, I just don't see this thing jumping. It's got a potential ABCD structure in place now. This just continues to be a place people don't want to be. Now, you would argue, and that targets that low on the ABCD structure, and you got volume coming in today. There are people that will look at this and say, okay, well, the consumer staples, which are the safe stuff, nobody wants them because everybody wants the risky stuff. Well, yeah, that may be true, and that kind of looks like what's happening. Let's see if the utilities doing the same thing. Utilities, staples, both pay big dividends, right? That's what, quote unquote, makes them safer. They're steady. They can pay dividends. Well, interest rates going up hurts them, and that's what we continue to see here. And I think that's really the story of what's happening. XLV, actually I had someone request this, that I talk about this, so I'll do it while I'm here. And the question was, what about this breakout? Is it a buy? You got a swing point high broken here, right? And then you broke another one. Right, so there's two of them that are broken. Did them on one fatal swoop, trying to extend away now. Volume expands today. That looks good. You're over the highs on the weekly. Yeah, there's nothing wrong with that. The fact that you broke two swing point highs suggests this thing's going to try to stretch higher. And that's what it did today. What does that mean? Usually 2 to 3 bars. And so, I'm a little late. Unfortunately, he asked me this just a little bit late last night, so I didn't get it on the show. But usually you get 2 to 3 bars extension, right, away from the break. And you can get more, but usually that's what you get. Well, you got one already. So, I would think you probably get another one or two. It's kind of hard to buy it now. Hopefully you bought it this morning if that's what you wanted to do. But yeah, usually when you get that break, if you have multiple swing points, 2 to 3 bars. So that one's stretching higher. XLY, discretionary. Let's see what that one looks like. And it was also trying to do a retest regen. I think it actually made it 65.86. Yes, it did. Volume wasn't that heavy. Yeah, but it was heavier, so it's going to come back and test again. So this one's not done yet. So those still look positive. I can't find anything really negative there. Let me quickly look at the aux markets and see if, let me see what those interest rates look like. So the short end of the curve was hit the hardest on the news. Let's go start there. So the IEI, which is the 3 to 7s, yeah, they're coming back down and going to try to break lower. Let's look at the 1 to 3s. Yeah, they broke. So you can see the short end of the curve is the one hit, and that is a pretty good break. And let me stretch this out because you've actually got, oh man, I didn't have this right for you, sorry. You've actually got it coming after a swing point low here. 84.30, 84.32, yeah, and it's at 84.32, closed right at it. And that's this bar here. So this is setting up multiple breaks on multiple time frames, multiple swing point breaks, multiple time frames. That leads to a faster move, same principle, just on the highest time frame, which means that you should get, if it does it on the weekly, right? It hasn't done it yet, but if it does it, that should lead to 2 to 3 bars extension on this time frame. Now, if we go to the longer end of the curve, and I'll do the 7 to 10s first. I assume it was worst on the shortest end, and it kind of graduated back up, and that is what it looks like it did. On the longest end of the curve, remember we got a break here. It didn't really get the extension, and that was also true when it broke here on multiple time frames. It really couldn't get the extension. So is this just a delayed reaction? It's going to get the extension, or not? I look at it the other way, and that is that if it should do it, if the probabilities favor it and it doesn't do it, then it's trying to tell you something. And what it's trying to tell you is that it's not ready to go down yet. And so, yes, maybe the short end of the curve is going to do it. Maybe it's not. Employment number on Friday probably is going to be the key number for the rate structures. Right now, I'd have to side with the ideal that it's not going to break, because so far the longer end of the curve has failed to produce that result when it should have. If that's true, then maybe that employment number is not going to be as strong as we think it is. Clearly, everybody thinks it's going to be stronger. What is this market going to do? And I'm sure it's going to happen at some point. What is this market going to do with the Fed tapering? And I know they say they're data dependent, but what's it going to do when the economic numbers start to suggest that this economy is not nearly as strong as everybody seems to think it is? We already had ISM numbers earlier this week that weren't that strong, right? They expected 54x, they got 53. What happens if the employment number is weaker? Well, I think the market's going to have a hard time with it because everybody's expecting something different, right? And that's usually when you get the biggest moves. So, I'm not predicting, I'm just simply saying you always want to look at the other side of what everybody's trying to, what everybody's thinking or doing. And right now, certainly, the Fed has primed everybody to think that this economy is getting stronger, therefore we can ease off. And I hate this word taper. We can stop pumping as much money, right? We can restrict the flow. So anyway, that's that. Gold, silver really didn't do anything today. Gold's still holding the gap. If I have time, I'll come back to these. I want to quickly look at the Canadian dollar. This one broke yesterday badly. Let's see what it did today. Follow through. So here's what should happen, right? You should get after an extension, after a break, you should get an extension. That's what the Canadian dollar is doing. The Aussie's trying to do the same thing. All right, let's quickly go through some of these questions that we have here that were emailed in and whatever you guys have on the boards. So let me start with what was mailed in first. All right, so the first question was the XLV. I've already covered that for Dan. Let's go to the next one. The next one is from Zaikai, it looks like is the name. Could you review LinkedIn tonight? It had a powerful reversal. Let's pull it up here so everybody knows what LinkedIn is, social media, resumes, so forth. Had a powerful reversal and the analyst downgrade yesterday. That was this big wide price spread bar you see here. He's got a stop set at the low of the bar. Had a similar reversal on 11.13, which looks like this one, but it did not hold. In other words, we came back down to it, and now we finally broke it. It wants to know what I think. All right, let's see what I think. Okay, so the first thing here is you actually, again, you got multiple breaks on multiple time frames should lead to an extension, right? You got 1, 2 bars, right? You had a break here of 2 swing points, and then you had a third break here. So you got the extension 2 bars. The third bar reversed, came back up. So it's not exactly what you would call the extension you would be looking for. So there's a little bit more strength than you expect. What really I think is happening over here is on the weekly chart, and that is that you've got this huge wide price bar right here, right, and it's coming into it. It's a wide price spread, high volume bars. Those have a lot of legs to them. So as it comes in there, it's hit it or came into it now 2, 3 times now. This time it actually got into it. You also had the breakout bar at the same price point. So there's a lot of demand, and should be, at this price point. This is where everybody thinks is the buy. And that's what they're doing. They're buying it. What's my take? It's going to break it before it's over. You're going to see it trade all the way down to here before it's over. I think you're going to make it all the way back into this support zone that you see. Does it happen immediately? Doesn't have to happen immediately. What I would watch, and you say you got your stop in, what I would watch is the retest regens. And what I'm talking about, the lowest one is here. Can it get back over that and push higher? And the second one's there. To convince me that it's actually going to trade higher, I'd want to see it trade back up to here. And do it rather soon. 3, 4 bars max out in here somewhere. Get over that. If it doesn't, I think you're going to come right back at it. You're going to try to break it down. You're going to try to break it on this time frame. So what I would do, I don't know what your entry price point was, but what I would do is I certainly wouldn't move the stop any lower. And I'd probably try to inch it up as this thing moves up and use the top of this bar as my stop out. Because honestly, it should not, if it gets back into this bar, let me clean the screen real quick. If it gets back into this bar, which is the November 11th bar, or the 13th, excuse me, not November, but the December, what is that bar? December 6th, is it? 7th. If it gets back into the December 7th bar after pushing a little bit higher, right, if it does, and comes back and gets into it, it's going to the bottom, and it's got a good chance to break it all down. So, if you want to salvage as much money, I try to bring that stop up a little bit. I think it's going to break before it's over, though. Next question. What do we got here? Apple. Okay, so this was an interesting one. So I pulled up an Apple chart because this gentleman's asking me about intraday. And it was actually pretty interesting. I didn't see this, and he brought this up. I was looking at it right before I came on. And the question is to bring it back, put it on 60-minute bars, bring it back 20 days or so, and look at the pattern from here, right? It came down, looped up, right? And then kind of held here, right? And then you got this big gap up. And he's saying, wow, doesn't that kind of look like what you're seeing right here? Where you come down, you come back up, you loop around, you back up. I mean, it's almost identical. And it was, so the question is tomorrow we're going to gap up, right? Well, I don't think so. But it is, there's a trader well known, you probably know about him, Jeff Cooper. He writes on Minionville now. He used to write elsewhere. And he does this numerology thing with Gantt, right? Gantt loved that stuff. And there's the table of, I forget what it's called. But it's almost numerology, right? And the thing is that if you look hard enough and long enough, you'll find all kinds of patterns. And it's one of the reasons I don't trade all these patterns. Is because there's too many of them, and you can find them everywhere. If you look hard enough and long enough. And you see this stuff anymore. Now you've got Bespoke, and you've got all these places that, that do all these statistics and stuff all the time. The Dow was down 6 times in a row. What's the probability that's going to continue down? Well, I don't know. That's getting into numerology after a while. And so, I hate to say, oh, well, that's just, there's nothing to it. But at the same time, I'm interested, if I pull this in and I'll put it on like 2-hour bars so we can see these big bars, I'm more interested in what this tells me. Where is the supply and demand? Where are people willing to pay and not willing to pay? And if I look at this and I look for wide price spread bars and so forth, here was a bar, it went under, right? Volume here, not that great. The volume here was the biggest, right? That's the biggest one. And you've got multiple ones here in between. You can go in and draw your zones. What does it do? It comes right back into the zone and it's stuck. It can't get over it. Tried to get over it this morning, doesn't have the volume, can't do it. So what does it do? It's stuck there. Why? Well, that's where the sellers are going to be, right? Anybody that was in here is in a losing position. Anybody that bought that retrace, right, is still in a losing position. Anybody that bought up here, losing position, right? And then it started down here. You can see this is resistance, all this area here. It's going to be hard to get over it. If you get over it, yeah, then you're going to find all the people up here that want to sell. So, I don't want to put too much into it, but that's the way it looks to me. I wouldn't put too much weight into that. Maybe it jumps tomorrow, maybe it doesn't. I kind of doubt it. Weight Watchers. Oh man, I'm running out of time here. Let me take this last one, and I'll have to hold those other questions until tomorrow. So WTW. Okay, so the question here has to do with the monthly. So let me pull the monthly over real quick. And the question is do we have an over? He called it an over-under. It's really an under-over. And really what you're looking for is 2-bar reversals. And I wouldn't call this a 2-bar reversal. Maybe it is, right? Because what we're talking about is the length from here to here. That's a pretty good distance. Traded from 46 down to 33. Yeah, that's enough. So that's a 2-bar reversal. You go under over on the next bar. That should try to reverse, go sideways to up. Well, it's already sideways 2 bars. So you're already seeing that happen on the monthly. So the question really is, should I be buying this is the question. And I think you probably would spend your time better going somewhere else and looking. You got 3 swing point lows down here, one of which has already been broken here. This one. So you have this one and this one. If it breaks under there, you got deep doo-doo. Right? That's a problem. If you're going to try to buy this, I would try to wait and let it break out. I just wouldn't mess with it until it did it. Make it show you some strength. I don't see anything in terms of people jumping in here. So I wouldn't be spending my time on this. I'd be looking elsewhere. Sorry, Federico, I have to take yours tomorrow, or I can do them for you because you're a subscriber. I can do them for you in the morning if you want on the morning broadcast. So I'll leave it at that. I'm out of time. Tomorrow's a big day. Friday's even bigger. That's going to set the tone for the next week, probably, right? And really the beginning of the year, because so far we're really kind of sideways. A little bit down, but kind of sideways. No tone set yet. Yeah, I've got some more people coming in here, and I just don't have time for you. I'm going to have to let it go. I'll come back to these things tomorrow. Thanks for watching. I'm going to have to expand the show if you guys keep answering so many questions, or asking so many questions, making me answer. Thanks for being there. Tell a friend, tell two. I'm going to let it go at that. I'm L.A. Little. This is and was your DailyWrap. Have a great one.